Two random dudes invest. Hey, I'm Danylo.
And I'm Brent.
And this is Two Random Dudes
Invest!
What's up, investors? Exciting episode today. What are we talking about here, Brent?
All right, so today we're going to be talking about whether you can be actively trading stocks, you can be swing trading stocks, you can be like picking which stocks you're going to put into your portfolio while also having a job, whether that's a 9-to-5 job, whether you're a solopreneur, you're a gig worker, maybe you're a bartender, waitress, whatever it may be. Can you also have a stock portfolio on the side that you have to actively trade? Or should you be in a managed fund through your bank, or maybe ETFs, which are electronically traded funds, which are basically a basket of stocks that you can buy. They can be in various sectors. They can represent an entire country's economy. They can represent Europe. They can represent Africa. They can represent EV stocks, innovation stocks.
Yeah.
ETFs, there's a wide range of them. We're going to have other episodes where we talk about specific ones. But today's question is, should you be in ETFs and funds while having a job? Or can you actively trade and swing trade on the side? Did I say that right?
In a nutshell, how active can you get without losing your marbles over your stock market?
Thinking about it
when you're
every day.
at work and you're just you see that red when you check your phone. It's and then you're having a bad day, and you want to avoid that. I think that's overall we agree that we shifted to a more a lifestyle approach. So we want to invest, but we don't want this to. The goal of investing is to have freedom.
Yeah.
And not to be stressed out about stocks. We want freedom and develop our wealth, and we're developing our strategies to do that. But you said an interesting point. So we have options about the ETFs, managed funds. Some are managed actively. Some are just offered by the banks, right?
Yeah. And you had a good story about your bank, how you kind of got into investing.
Yeah, so that's actually how I started with investing. Well, in Canada, it's good for your business. So as a business owner, putting money into your RSP, which in the US, it's a 401k for retirement. So I put it for there because you save on taxes. Fantastic. So the bank offers me this 3% guarantee on my sum. I was like, that sounds good. And I didn't know anything about it. All ecological. It was all legit. But then after a month or two, I did my research, due diligence as it were. I read this book, Millionaire Teacher, and the average return from the S&P 500, which is an index fund, is 8% historically.
Over time, if you hold it for 30 years, yeah.
Yeah, if you average out over 30 years, maybe not year per year. So why not just put it into that as opposed to 3%? So the bank is probably taking that 5% for themselves. So I actually didn't know you could cancel that. I actually just paid $200 to get my money out of the bank and just put into Questrade and manage it myself, take my finances into my own hands. I'm I'm doing this. I didn't know anything about it, but a year later we're doing this, which is crazy.
Yeah. But so basically, I think the important thing with bank funds, and this is just from all the research that I've been doing, is the main difference between ETFs and bank funds. Bank funds aren't bad. They're not terrible. I mean, for years, they've helped people grow their wealth. But the main difference can come in the bank funds can have fees ranging from 1 to 3%, their fees. And that doesn't sound like a lot, but it can be a lot over 20, 30 years. That can, and the difference is a lot of electronically traded funds, you can buy a basket of stocks which represent the S&P or whatever, and the fee can be 0.3%. So the difference between 0.3% and 2% doesn't sound like a lot, but over 10, 20, 30 years, it can represent thousands and thousands of dollars that you're missing out on for the same products. So that's why, for me too, a long time ago, I took my money out of funds. But again, funds might work for some people. They might have a fund that they've been putting money into and it grows and they just trust their bank, and all you have to do is, put you get your paycheck and then automatically everything's just kind of divided. And for some people that works. Again, this question is does that work because you now have time to concentrate on your family and your work, and then you don't have to worry about that? And then for us, we're different, me and you. We want to actively manage our funds. But what I'm realizing is with the economy coming back and my photo business growing again, I think for me, I have to take a different approach.
As things are picking up, we're not by the computer every single day ready to check up on the latest updates on the S&P 500 and
Each
Dow
stock that we
Jones, and
hold.
like I got my updates. Like you can't have the updates all the time. Things are changing in our lifestyle, and want to adapt our lifestyle and our investing to like blend well.
Yeah. So do you think that, because we disagree on this, right? Like
That's what's good about it.
but that's the good. You think that you can have your business and you can swing trade on the side and trade on the side? Or what was...
Yeah,
oh,
so
shit.
it gets into nitty gritty of like terminology. I think we both agree that we can't day trading. That means like trading stocks, buy and sell and buy the same day while doing a full-time job. That's like a bridge waiting to be burnt, or whatever analogy you want to use. It's statistically not good.
Yeah.
It's gonna go bad unless you got really good risk management, and that's where we get like heated up. Day trading is like you're competing versus the algorithms, the hedge funds doing all these shady things. Swing trading is where I think with good risk management, it's possible to grow your wealth with time. Right now, my thesis is I could do swing trading part-time and long-term and try that.
So what is swing trading?
That's an excellent...
What is swing
Excellent,
trading? Like what's your definition of swing trading?
Yeah, so swing trading would be to buy a stock, hold it for like 2, 3, 4 weeks. Sometimes it could be like a month or two. You're trading the momentum because you think it's going to go up. The fundamentals of the company has to be right. It's not just a random stock. Like a day trading, it could just be any stock. They could be selling paper clips or flying ships. Like the person doesn't care as long as the technical analysis makes sense.
Yeah.
Unless it's some news that we should know about. Yeah, so that's swing trading.
Okay, cool. I think that to swing trade, I still think it's very active. And I think with swing trading that it's still speculating. I mean, everything with stocks, we're speculating that the price is going to go up. So even if you think you believe in Apple or you believe in Amazon and you think that company in 10 years from now is going to be bigger, you're speculating that it's going to be bigger. So if we say any different, like, yeah, we call it investing and all that. But at the end of the day, like I've really become like, I have to feel the zen of the fact that we are technically gambling, because like people who go to the racetrack, they say the same thing. They like do their study, they study all the horses. They say this horse is stronger and it comes from a mom and dad that are just strong and it should be super fast and it won this race and that race, so it should win the next. Stocks are the same. Now the thing with stocks is there's a lot of horses that win, and there are a lot more fundamentals and companies that you can put your money into that are consistently making money and that will hopefully consistently make money over a long term period. So the mentality that I have now is that I'm really trying to create a portfolio and stocks that I could go on a trip for like 10, 20 years and that stock is going to be around. So again, it's the same thing that I do with my crypto. Like 80% of my holdings are going to be in companies that I believe in to the death. Like my goal is not to sell. First off, if those stocks grow, I'm not going to pay taxes when I sell them if it's out of my TFSA or my RSP. And at the same time, the worry is going to go away. That's kind of where I'm at. I don't think that you can swing trade. I really think that day traders, for the most part, online that say they're successful are not, because again, there's a lot of studies that show that they're not. And I think they're just trying to get money from people. I mean, trading companies, the reason exchanges make money is when a lot of people are trading. So they have an incentive for you to trade a lot. Yeah. My goal is to just trade and avoid the swings, avoid all that, and just kind of get in here and hold it through the thick and thin of all that randomness.
Fun jazz. Yeah, we're absolutely right about the companies. Like Robinhood, their app is designed to be like a gambling. It's like a gambling machine. It wants you to buy and like it actually suggests things that are more risky. for you to lose money, basically. They actually make money from the volume of trades they can get from the people.
Because then they sell that to other companies, right?
Yeah, they sell it to like Citadel. I think Citadel is one of the
hedge funds.
I don't
Is it a hedge
honestly.
fund?
It's like Gargantua. They own the money to borrow the money. They borrow. I don't know how it works. So that's why financial literacy is super important. Like we've been doing this for like a year, and we still kind of don't know. And I'm like, I want to dive.
Well, I've been doing it for 10 years. Remember?
Yeah, you've been doing it for
Like
a long time.
I've been in it for 10
this
years,
channel,
and
this channel.
this channel for
Yeah.
yeah.
But we like still don't know the inner
learning.
workings of like we're learning all the time. But Citadel, I think it's the one that borrows the money to the platforms. It's a complicated thing. Like we don't even understand how it works. So it's good to ask
Do the
questions.
research on that.
Yeah.
And if you know a lot, comment below like what you know about Citadel. Let us know also in the comments below what you think. Like, do you think that you can hold your job and focus and have a successful job while also swing trading and trading? Do you think that trading is gambling? Do you think that day trading? Do you think that that's gambling? Because I do think it's kind of gambling.
And can you do it while not going insane and just going crazy about like the red days?
Yeah, because my goal at the end of the day is to, first off, education first. So I would rather put money into my education and bettering myself and becoming a better human being, and also putting more money into my business so that can grow, and also treating my clients with the respect that they deserve for the money that they pay me, and not have my mind on other things. And during the last year and a half, it was okay to do that. But the last 4 to 5 months, I've really been kind of making it so that my portfolio is standalone, and it needs a little bit some finessing here and there, but it can be done just a few hours with a few hours of work a week.
I think both of us are shifting going towards a more passive. We're getting less active because things were like, we had more time because pandemic, things slowed down, but now things are picking up. Ain't nobody got time to like check up on the stocks. You want to go more passive. And like you said, it's important to just like, you're an amazing photographer and you want to deliver that quality all the time. And your mind has to be in that creative space and not in the space of stocks,
Like you don't want to be, my goal is not to be shooting and thinking about like my portfolio.
Yeah.
And most people, I think it's like, I don't think most of us are made for that. I think at the end of the day, I'm a creative, you're a creative, and it's two different minds.
Yeah.
But I have noticed that getting into the analytics of what we're doing in the stock market, for some reason, it gives me a break off my creative mind. And there's also the creative mind that you have to use when you're like doing your research into companies that you think are going to be successful in the future. So I really do think that they've been feeding each other well, but feeding each other well when I'm not obsessed on one.
Yeah, that's an excellent point about like balancing both brain hemispheres. But I think like at the end, good old Siri, after all whole tricks again.
What were we saying?
You made an excellent point about, yes, like focusing on the clients, but also as entrepreneurs, you have like a decision. You could put money into 2, 3, 4 hours of maybe studying about different stocks, putting time into that, or we could put money into starting a new project, offer new service, and get more income to put in the stocks. And which is more passive, and then you have more peace of mind going more passive, focusing on the income rising, and then keeping the investments more passive, because I think we're going more into the lifestyle design direction with time.
And our goal is to, with the channel, also talk more about like creating a lifestyle, and we call it lifestyle design, architecture, lifestyle architecture, whatever you may, the goal is to live a life that is designed in a way that you have the least amount of stress, a lot of happiness, and you're doing things that fulfill you. Going back to the stocks and whether or not, you should be in ETFs or funds, I think that I'm going to give what my goal is, and it's going to be an approach of investing, having a portion that's set aside for stocks that I want to be in for a long-term perspective. Like I'm talking 10, 15, 20 years, like I said earlier, maybe for life. And then also having ETFs, electronically traded funds, that are invested in various markets. So I'm going to allocate a certain percentage of my capital to European markets. I'm going to allocate another part to the American markets, to Canadian markets, and spread it around in a way that as the income's coming in every month, I'm going to put money into those funds.
We're starting to get practical.
Yeah.
Like, what do we do in the end? Like, it's all great, Brent and Danylo, but what do we do? Well, yeah. So to add to that, like, I like to invest into things I believe will like give some sort of positive impact, as naive or like possible that is. That's why I like EVs. I think it's positive, but there's some negative sides too that we'll maybe dive into other videos. But like, that's why I put it into ARK Invest ETFs, which are actively managed ETFs, and some ETFs are passive. So that's good to note and to get informed about, because they're not all the same.
Yeah.
I like ARK ETFs because they manage it for you, and then you don't have to do all the thinking. They just if the markets change, they adapt, they do the changes. Of course, it went up and now it went down, and everybody's like, the entire internet is hitting Cathie Woods because her like fund went down 20%, but like it went up whatever,
Hundreds of percent.
hundreds of percent in the last, like, you know.
I guess the thing to caution with those is that there's a big difference. Like, you really have to look at the funds too. Like, at the end of the day, either way, even if you're gonna passively invest and you're gonna put your money into a bank fund or these ETFs, these actively traded ETFs, I think that we have to really you have to put a lot of effort in at the beginning. Like, just because you're gonna passively invest your money into these index funds, you still have to put a lot of research in at the beginning, and really look at the companies that they put their money into. Because sometimes, like, I've been talking to people and they don't even realize that a fund that they put their money into is maybe 20% into Apple stock. And then you hear that person say, like, I would never put my money into Apple. But just by putting their money into a certain fund, they might be putting it into Apple. Or someone might say, I don't like Tesla. Like, I would never put my money into Tesla. And then if they have their money in ARK Invest, which is Cathie Wood's, I think, I don't know what the allocation is, but their top holding is Tesla. So you need to look at that, and then also realize, like, you can easily put your money into ETFs and be too lopsided towards one industry as well. So again, it's not passive. You're still doing a lot of research. And even your fund at the bank, you should look at, like, where's the money going?
Yeah, that's a good point, because that's what happened to me. The Eco Fund. It says Eco Terra. Sounds good, doesn't it? But really, one of them was like, it had all these petroleum companies. I was like, what? Yeah.
Yo.
I was like, okay, I'm gonna choose what I'm gonna put my money in. That's why I was like, I got like kind of pissed off, because I studied environmental sciences, and then here they are, like, kind of flexing this.
This is a good point, man.
Yeah, Neo Terra. Yeah, that's why it's important to, like, really, like, question things. Sometimes, like you say, it's not what you think.
Yeah, it's not what you think.
Find out what stocks are in each ETF.
So I guess at the end of the day, I think you can be passively investing and putting your money in little bit by little bit into funds, whether it be with the bank or ETFs that you choose. But at the end of the day, I think that if you're trying to swing trade and you're trying to make money actively in the markets, that it takes up too much attention. It takes too much attention away from your actual job, your actual responsibilities, and that it can be detrimental to one part of your life.
Yeah, I think I'd agree with. I think for most people, for sure, like, passive is the way to go. I like to learn, so I just kind of want to learn about the swing trading. I think it's very hard to do swing trading and do a job on the side, unless you use very good risk management and you have, like, a really strong strategy and you know what you're doing and you're super disciplined. Like, that's not 99% of people. Like, even me, I, like, slipped up, and, like, I'm still up, but, you know, I lost, like, on EHung because I thought that the market was going to come down, and then well, actually, I had a plan and I did not stick to the plan. It's the emotions that get us all the time. But I think with discipline, like, in time, and I think also going slow into it. Let's say I just want to be like, the best trader right away and run a business. Like, at the time, it's probably not going to go well. But if it's like, okay, I'm going to learn, like, slowly, do a couple trades here and there. Like, I do one trade at a time now, put my stop losses. Like, and I see it as like, it's gambling. Like, it could go down. It's money that I could lose. I put $1,000, started with that. Now it's at 3.5. It's great.
Hey.
But then it could go back down. Like,
hey, good
it's
job.
just
by
for
the way.
learning.
That's,
It's just
wow,
for
that's
learning,
really
you know?
nice. Yeah, and like you said, if there's a part of you that you're gonna want to like, you can also allocate a part of your portfolio as your kind of fun money, your gambling money. Like some people go to Las Vegas and they say, I'm gonna spend $1,000, and if you have the mindset where you don't have a gambling mindset and you can stop yourself, sure, like have a little bit of money that you do speculate with.
Yeah.
But with the major part of the wealth that you've built up, I think that trying to have some due diligence is the best thing. Again, this is not financial advice.
We are
always
two random
we're just
dudes.
two random dudes who don't know anything. At the end of the day, we're
don't
just
listen
as
to us.
clueless as everybody else in this beautiful world. But again, I hope that kind of gave like our thoughts on the subject.
Yeah.
And we hope you stick around, and we hope you see where we're going to go with this. Because over time, I'm sure we're going to kind of been changing our minds constantly about where we want to go. And that's what this channel is all about. It's to kind of show our journey, because I think a lot of people are asking the same questions. A lot of people are seeing the markets go wild in different areas with like the GameStops and the AMCs, and they're hearing about Bitcoin going up and crashing. And our goal is just to kind of give you our explanations on it and where we're at with it. And hopefully it can help you kind of relate back to that.
What are we going to talk about in the next episode?
What is the next one?
It's going to be
What is the
juicy.
next one?
It's
What is
going
the
to
next
be
one?
real bloody juicy.
We're going to talk about volatility in the markets and who can handle it. Like, are we made for that kind of volatility, right? Is that what we're talking about?
Because the stocks are going up, down, up, down. Like, can you handle it emotionally? Like should all people just go passive and just call it a day?
Yeah.
Like,
Like a lot of us, we're not made for the swings. We sell when we shouldn't be selling, and we buy when we shouldn't be buying because of like our psychology, and the markets are playing that psychology. So we'll talk about that next time.
next time.
So again, thank you for coming. Hey, two random doors.
All right.
3, 2, 1, hey.
If you're on the go, you could check out our podcast, link in the description.